Get everybody there at the Blockchain Center. I hope you are very, very well and doing very, very well and very happy with how everything's going in your life. My name's Craig Cobb. I am the dude who runs TraderCobb.com. I'm a crypto trader. For those of you who don't know, I've been trading traditional markets for 12 years, and for over the last 12 months, a bit more than 12 months now, I've pretty much exclusively focused on trading cryptocurrency. Why? Because as a trader, we want volatility, and volatility is big moves because we find our entries. If our risk multiple is this much, in traditional markets, our reward multiple might be that much. In crypto, well, you know, the reward multiples are huge, and that's for upside or downside. Why should we learn to trade in cryptocurrency? Because hodling hasn't really done much good this year, and hodlers have been hurt so far. Your portfolio will have gone down if you have not been entering and exiting strategically along the way. So, as much as you might not think that trading is for you, I would definitely encourage you to explore the option so that you can get a new skill set and also just give yourself some tools to make money regardless of the direction of the market. Now, there are some limitations around what we can and can't short, but having that skill set is going to help you immensely. Now, what I want to bring to you today is the introduction to what I call my crypto cradle trading strategy. Now, it's based around moving averages. So we're going to kick straight into that by showing you or introducing you to the averages that I use and giving you a clear understanding as to what moving averages actually are. Because I know a lot of people put a lot more weight into certain things, and I put no weight in at all. I don't want to explain myself. So first of all, moving averages are the moving average of price. So therefore, price needs to be your king, your queen, your god, your whatever it is. It needs to be the Mac Daddy. The number one most important thing is price action. As a matter of fact, take away, if you said to me, Craig, you can have all the indicators that you want, but no price, or just price alone, I'd go for naked price, and I'd still be profitable, I would guess. Why do we use moving averages? Well, price moves in rhythms like a wave. I use moving averages as an equilibrium point. When it pulls back into certain zones, I am alerted to look for trading opportunities. Now, the trade needs to be built with a structured approach, but it brings it to my attention when it gets into certain points. It can help me with areas to buy, go long, or sell, go short. Now, if we have a look here at the moving averages that I use the 10 period and the 20. That's it. No 200, no 50, nothing else. The 10 MA is the last 10 candles that you see smoothed out on a line. So this 10 period moving average is the last 10 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, smoothed out. Remember, it follows price. The 20 period moving average is the last 20 candles. You can use simple or exponential. It doesn't make too much of a difference for the way that I use it because it's for a zone. I use exponential, okay? But as I say, it really doesn't matter. Now, what not to do with moving averages? It's not support and it's not resistance. Moving averages are not support and resistance points. Not at all. Just flat out no. What if two moving averages cross over? What does that mean? It means nothing. I'm sorry. I know a lot of people talk about dead crosses, golden crosses, but I'll tell you what, when you understand how these moving averages are calculated, and let me help you with that, when price moves, the moving averages move. So if you have let's say the 50 and the 200, because I know it's widely viewed, if the 50 comes up and crosses through the 200, that simply means that over the last 50 periods, the price has moved up enough to bring that moving average through the 200. That's all it means. Now, it doesn't mean the price is likely to continue. It doesn't mean you should go and buy. It is not a strategy. It is not a signal. It is nothing unless you make it something. And I don't, because it literally means nothing. And you'll start to see, if you go onto my website, TraderCobb.com, plenty of educational material there. And if you've been watching me on my social media, Twitter, Facebook, all that sort of stuff, you'll know that I bring in a lot of different elements to find a trading strategy. So this is why I really crush that theory of a moving average crossover being any good. I spent a lot of time and wasted a lot of money about it would have been 11 years ago, my first year, wasting money on that sort of stuff. So you don't need to anymore. We use moving averages to help us with a zone at which to trade from. It's called the Cradle Zone. Brrr, drum roll, please. There's an area we believe that trading opportunities lie. It's a zone because it's not an exact science. The buy zone is the area in and around that 10 and 20 period moving average. Now, it needs to be in an uptrend. I'll show you in a minute. The sell zone is in a downtrend in and around that 10 and 20 period moving average. As you can see here, this is the zone in and around this area here, okay? in and around that 10, which is the white, and the purple is the 20. Sell zone here. Now, what I actually want to do is go and show this to you in the market right now. Now, by the time you see this, the prices will have moved on, which is good because it's not I'm not making it specific to, I'm not making it time sensitive is my point. When price pulls back into this zone, excellent. We're interested with looking. Now, there's a small bullish candle there. That's another rule for one of the trading strategies for another day. But let me jump across now and throw up the charts for you. Here we go, right here. Okay. So let me find something that's trending, because rightly so, like, you know, I can't be using it in a trend. Actually, let me just show it to you on Bitcoin. This sell zone, right? And I any market and any time frame this works. This is why it's such a powerful thing. You can't argue with it. It's a fact. It's an equilibrium point. Look, as the moving averages get in the correct order, and we have a downtrend, price moves into that average sell zone, bearish candle breaks, falls back into that sell zone, bearish candle breaks, falls back in, falls. It works in a downtrend, and we have to go back a little way to see it in an uptrend. But look, move in, back away, moves back in, moves away. And look, it doesn't always set up trades when you get in there, and it doesn't always stick to it. Obviously here, it pulled in way deeper. Remember, it's not a trading strategy on its own. The reason for me showing you this is it's something that you cannot refute. You cannot argue. It is just fact. When you see a nice trend, you will see pullbacks in, and it doesn't matter what the time zone is, all right? It doesn't matter what the period is. What happened there? If we have a look at this on the weekly, again, look, pulls back in to the cradle zone, moves away, pulls back in, moves away, pulls back in. And it was a great indication of when to be looking to be buying Bitcoin last year, as we saw it in an uptrend. Now, of course, this year we've seen it pull back in a couple of times. There haven't been many big moves, and it pulled a bit outside of it on the weekly here. Coincidentally, the monthly is right back in that cradle zone now. A break up would certainly be very bullish after a very healthy and indeed required pullback. These moves are not sustainable. And in fact, the further away you get from the cradle zone, the more likely we have of a probability pullback. So again, there are many ways to use this cradle zone. How can we use it for trading opportunities right now? Well, let me go and show you something I prepared earlier. This is my watch list at the moment. Again, you know, a pullback. What am I doing? On the daily here, Zilliqa, bullish candles breaking to the upside in that zone. Nice move. Now, I was watching this for a breakout. Another trading strategy I employ, a Bitcoin breakout, broke really, really well. But now, look at how the moving averages are in the correct order. Look at how this trend is formed. Higher low, higher high. I'm now waiting for a pullback into this zone. Then I'll look for an opportunity based around one of my strategies, which needs to have 8 essential factors met, and there are another 9 bonus factors I can look to tick off as well. You can start to add things like Fibonacci if you know how to work it and what's going on in there. As you see, 61.8% right smack bang in that cradle zone. Now, this isn't a full trading strategy. It's not meant to be. It's meant to open your eyes to something that if you're trading technical analysis, you should really be paying attention to, because whatever else you use, this might just be the place to start to build out some solid foundations for trading strategy. And if you want to get my trading strategies, go to tradercobb.com. If you don't, no problem. Get me on my socials, Facebook, Twitter, get the Trader Cobb podcast. But guys, I do a huge amount for the community, trying to help people to learn to trade better, properly. I've been doing this for 12 years. Put the 10 and 20 period moving average on your charts and have a look for yourself, because it's something you can't argue. It's something that just is. You got to build a strategy around that if that's what you wish to do. So well done to everyone at the Blockchain Center. What you do is fantastic for the space, for the community, for Australians and for Australian projects. I highly commend what you're doing. I fully support you. And Karen, you're an absolute legend. I hope you've had a great trip in Hawaii. Cheers, guys. Bye for now.